Hey everyone, and welcome. Today we're going to talk about something really interesting, a financial tool that's been around for ages, especially in India. It's called a Chit Fund, and what's so cool about it is how it blends saving and borrowing all into one system.
So to really get a grip on this, let me ask you something. Think about your own finances. What if saving and borrowing weren't two totally separate things? What if you could roll them into one single community-based system? That's the puzzle we're digging into.
I think for most of us, there's this constant push and pull with money, right? Part of you really wants to be disciplined, save up for the future, but then life happens, and boom, you need a chunk of cash like right now, and you don't want to deal with a mountain of paperwork.
And that's the classic dilemma, isn't it? It feels like you always have to pick one. Do I save for later, or do I borrow for now? And this isn't some niche problem. It's a choice people everywhere are making every single day.
Okay, so this is where the Chit Fund steps in. And honestly, it's a super clever, community-powered solution to that exact puzzle. It's a system that's literally designed to do both things at once. Let's break it down.
All right, so at its very core, a chit fund is a kind of hybrid. The best way to think about it is it's like a savings club and a credit union had a baby. Basically, you get a group of people together. They all agree to chip in a little money regularly, and that big pot of cash, it's available for anyone in the group to borrow.
Now, the people in this group, they're called subscribers, and they are the absolute foundation of the whole thing. Every subscriber promises to contribute a fixed amount of money each cycle, which is usually monthly.
And that big pile of money they all put in? Well, that's called the chit. So let's say you have 20 subscribers, and they each put in, say, 1,000 rupees. The chit for that month is 20,000 rupees. That's the prize pot, and one member is going to get to take it home. And holding it all together is the foreman. This person is the organizer, the manager, the person who runs the show. They run the process to see who gets the chit, they handle all the cash, and importantly, they make sure everything's done by the book, legally. Think of them as the trusted manager of the whole operation. Okay, so we've got the players, we've got the lingo down, so how does this actually work month to month? How does someone get their hands on that money? You'll be surprised at how simple the process is. First, step 1. Everybody puts their money into the pot. Step 2, an auction happens. This is where members who need the cash can bid on it. And here's a twist. In step 3, the winner isn't the highest bidder, it's the lowest bidder, the person who's willing to take the pot for the biggest discount. Then, step 4 is where everyone benefits. And this is the really critical part. The winner doesn't actually get the full pot. They get the total amount minus the discount they bid. So, using our example, if the pot is 20,000 and they bid a discount of 2,000, they walk away with 18,000. So what happens to that leftover 2,000? Well, that becomes the profit or the dividend for the entire group. And this is where the magic happens. That 2,000 rupee discount gets split equally among all 20 members. So that's 100 rupees each, which means next month, instead of having to pay the full 1,000, everyone only has to chip in 900. It's like getting a little return on your savings, just for participating.
So, as you're probably seeing, this whole system has two very different sides to it. It's helping people with two totally different financial goals all at the same time. But, and this is a big but, the whole thing relies on one very important human ingredient.
So let's look at those two sides. On one hand, you have the savers. These are the folks who don't need the cash right now. For them, it's a really disciplined way to save, and hey, they earn a little dividend while they're at it. Then you have the borrowers. For them, it's an amazing way to get a lump sum of money, and it's usually way, way easier than jumping through all the hoops for a bank loan.
But, like I said, none of this, not a single bit of it, works without one thing: trust. You absolutely have to trust that everyone else is going to make their payments on time. You have to trust that the foreman is running things honestly. The entire system is built on that foundation of people just being reliable.
And because trust is so incredibly important, there are a few key things you got to keep in mind. The whole thing has to be transparent. And in India, it's actually regulated by a law from 1982. But let's be real, there's always a risk. If the foreman is shady or if people stop paying, you could lose your money. That's why picking a reputable, well-run fund is just absolutely non-negotiable. Now, I know what you might be thinking. This all sounds a little old-fashioned, right? But what's so cool is how this very traditional model is getting a 21st century upgrade. It's a classic case of tradition meeting technology. Get this. Today's chit funds are going digital. We're talking instant payments with UPI, we're talking group communication on WhatsApp,
Foremen are using cloud software to track everything, and automated reminders are sent out so nobody misses a payment. Technology is just making the whole process so much smoother and more transparent.
But here's the key takeaway. The technology isn't replacing the heart of the system, it's just making it better. All these tools are helping to keep that community-driven spirit alive and well, while making the whole thing bigger, better, and more accountable than it ever could be before.
So that leaves us with one last question to chew on. You know, in our world of fancy fintech apps and complicated bank products, is there still a place for something this simple, something based on trust? Could a community-powered financial model like this actually fit into your future? It's definitely something to think about. Thanks so much for joining me.